Welcome back to the program. It's Sunday, the 6th of July. Hope you had a great 4th of July. Celebrate America's 249th, 250 coming up next year. Can't wait. Should be a big celebration. I want to talk to you today about the Federal Reserve and Donald Trump. President Trump is not happy with Chairman Jerome Powell, chair of the Federal Reserve Bank. President Trump thinks Jerome Powell should have cut rates a few times already this year, and is doing what Trump does to people that don't do what he wants, and that is call them names, belittle them, bully them, that kind of stuff. Not a fan of that, but nonetheless, we know that's Trump's shtick. Trump wants preemptive cuts in interest rates, claims they're being called for by many, and there are economists that have been calling for the Fed to cut interest rates preemptively, anticipating inflation will continue to go down. Trump has claimed there's virtually no inflation in the U.S., and that costs of energy and most other things are on the decline. Well, that's not true. Something we want to remind ourselves about inflation. Inflation is a rate of change in a price index. The ones we think of most often are the Consumer Price Index, the Producer Price Index, released monthly by the Bureau of Labor Statistics. There's also the GDP deflator, a favorite of the Federal Reserve. This comes from the GDP series, data series, so a pretty broad measure, and usually comes out a little bit lower than inflation rates identified by the CPI or the PPI. But the inflation rate as a rate of change in the index, as long as it's positive, that means prices are still rising. And while the rate of change of inflation has been falling since the Fed began raising interest rates in 2022, there's no denying that that's better. But that means the second derivative is negative, not the first derivative. And so it's important to keep that in mind when we talk about inflation. To say there's virtually no inflation when the inflation rate is 2.4% is just wrong. What they mean is the rate of change in inflation month over month since the Trump administration is taking control has been low to almost nothing. And we've seen some negative changes. For the Consumer Price Index, on a year-over-year basis, the most recent data available, which was for the month of May, CPI increased by 0.1%, bringing the year-over-year change to 2.4%. So clearly not zero. And if you look at the index itself and look at some of the components for that period of time, of the 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28-ish items on the all items index, only 4, let's see, what do we have? 1, 2, 3, 4, 5, 6, 7, 8. 8 are negative. And that's led by energy. And there's no denying that energy prices have been falling for some time, helped over time by increases in supply, reductions in demand, and since the Trump administration has come into office, a real deliberate effort to move away from the EV mandates, move away from net zero, and embrace fossil fuels in U.S. energy production. And that means higher supply, and that has definitely helped prices. So really good news there. And then the other components that are negative are new vehicles, used cars and trucks, apparel, transportation services. So these are somewhat related to drops in demand. So the way we can reduce prices is a few ways. A recession, so a sharp drop in aggregate demand, a large increase in aggregate supply, which is kind of the motivation of supply side economics to increase production, to increase output by reducing interest rates and regulations, or some combination of both. So I would say that Trump's assessment of the actual inflation rate, the phrasing, what it means, they're a little off in the Trump administration. And so this public effort on the part of President Trump to belittle, to embarrass, to try to bully the Federal Reserve, the FOMC, the Federal Open Market Committee, led by Jerome Powell as a chair, to cut interest rates is not good look. I am a monetarist. I believe in monetary policy. I believe in the independence of a central bank, and that's the key element here, independence of the central bank. The Fed is really not a part of the U.S. government. Of course, they have their charter to exist, given to them by the U.S. Congress in 1913. That charter could be rescinded at any time. There's no indication in the Constitution that allows for the central bank to exist. But nonetheless, that's what we established in the early 20th century. And so the connection points to the federal government are the charter issued by the Congress and the people that run the Fed, led by the Board of Governors. The Board of Governors are appointed by the president and confirmed by the U.S. Senate. There are 7 members, and they have 14-year terms. The reason for those 14-year terms is they want to keep Federal Reserve officials out of the political cycle. So the U.S. House is 2 years, Senate is 6 years, presidency is 4 years, Federal Reserve Board of Governors 14 years. Okay, so that's an effort to ensure independence from the political cycle, which you can probably all appreciate. I'd rather have a bunch of PhDs in Washington, D.C. and New York managing our money supply and interest rates than a bunch of, well, I won't characterize them, members of Congress. So I think the public fight President Trump is picking with the Fed will not go well. So he calls him a loser, said that there's no inflation, which is not true. And it seems like, while obviously we want lower interest rates to help increase investment, increase domestic consumption in interest rate sensitive sectors, spur economic growth, the economy, based on the economic data available, is at full employment right now. The unemployment rate in the low to mid 4% range, inflation, not yet at the Fed's target of 2%, but lower than it was 2 or 3 years ago at 2.4% annualized basis at the consumer level, a little lower on the deflator index if you want to look at that one. And so it seems like Trump is more interested in the valuations of the stock market, the level of the stock indexes, than the macroeconomic economy when he's pushing Fed Chair Powell to lower interest rates. And Trump really embraces the stock market as an indicator of his success as a president. And I think that's a big mistake. There are so many other factors impacting stocks. No question, macroeconomic policy from the fiscal side can be beneficial or hurtful for domestic stock prices, no question about that. But the Fed is the reason why stocks are where they are today. Blatant speculation is the reason why stocks are where they are today. Algorithmic trading models are the reason why stocks are where they are today. If you think of all the problems in the US economy and around the world, a rational analyst would suggest that stocks should be nowhere near these levels, but still here we are. And so Trump loves that brag of stocks are at all-time high, and they are. We've hit another all-time high in the face of the Fed keeping interest rates unchanged, even though Trump wants them lower. Stocks have reached another all-time high. And guess what? Stocks reach an all-time high for George Bush. They reach an all-time high for Barack Obama. They reach an all-time high for Trump 1. They reach an all-time high for Biden. And now another all-time high during Trump 2. It doesn't matter what fiscal policy is. What's been driving stocks is monetary policy, rhetoric, algorithms. Even just recently, President Trump has gone after Powell again. And now there's an effort on the part of Republicans to try to suggest that Jerome Powell has lied under oath, claiming that he gave deceptive testimony to the U.S. Congress. President Trump wants Powell to lower interest rates. Powell is not lowering interest rates the way Trump wants. So therefore, Trump wants Powell out, says that the failure of the Federal Reserve to not cut interest rates is costing the U.S. a fortune. And what he means by that is the cost of borrowing is higher than it could otherwise be. Remember now, we have $37 trillion in debt. Our net interest payments on an annualized basis are now over $1 trillion a year. And that's not so much on the current Fed, as to say 2025. That's on the back of the past 15 years of the Fed monetizing federal debt. And if you really want to get angry at someone for costing the U.S. taxpayer money, think about Janet Yellen, Treasury Secretary, who failed to take advantage of the yield curve when funding the U.S. government, funding on short-term basis instead of longer-term basis when the yield curve was inverted. Short-term rates were higher than long-term rates. So if you want to put some blame on the costs, go to Janet Yellen. We still have a somewhat inverted yield curve, but it's flatter than it was during the Biden administration. So if Trump is concerned about Powell not cutting rates and therefore costing the taxpayers a fortune, what he really needs to look at first is deficit spending. That's the driver for increased interest expense for the federal government. So we could borrow less, and that would certainly help decrease net interest payments. the Fed could lower interest rates, that could help for sure. But there's something that the fiscal side can do as well, not just the monetary side. Now Trump has Carolyn Levitt, the press secretary, going after Powell. She says, Jerome, you are, as usual, too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. You should lower the rate by a lot. Not good phrasing. She's referring to the federal funds rate, the overnight rate that the Federal Reserve controls, and they set that interest rate by manipulating the money supply on a periodic basis. So she wants the rate to go down by a lot. Now, we talk about the federal funds rate, but then there's also interest on reserve balances. That is a driver for the money supply. And so she's talking about both the federal funds rate coming down and the interest on reserve balances coming down. And she went on to say hundreds of billions of dollars are being lost and there's no inflation. Again, that is not true. If President Biden was saying that, if Karine Jean-Pierre was saying that, the right would be all over them. It's not true there's no inflation. The rate of change and the rate of inflation is falling, but inflation rate is still positive. And so now Trump comes out saying that too late, you should resign immediately. So they want this investigation into the Powell testimony, claiming he lied under oath about money being spent by the Federal Reserve to redo Federal Reserve headquarters in Washington, D.C. So they're claiming that Powell lied about what is going to be done in that renovation project. And so now we have the FHFA, the Federal Home Finance Agency head, Bill Pulte, jumping on board and calling for Congress to investigate Powell immediately. We think about the FHFA, we're talking about the group that was established in 2008 after the financial crisis, more cover your ass stuff from Congress to help manage Fannie Mae and Freddie Mac, the housing agencies that help underpin the U.S. housing market. So we don't want a public spat between the president and the Fed chair. We don't want this bullying going on. I am, and I have been for some time, if you know, calling for the Fed to remain on hold for an extended period of time. There's a lot of uncertainty out there. By the economic data published by U.S. government sources, the U.S. economy is at full employment and inflation remains a bit of a problem, which means the Fed should maintain interest rates where they are. Since 2008, the Fed has sullied its reputation, has made it hard for monetarists like myself to defend the Fed because of their zero interest rate policy extended way too long, their massive quantitative easing, the huge jump up in their balance sheet, and essentially pushing aside their dual mandate of full employment and stable prices and really being just about plunge protection for the stock market. That seems to be the driving goal of the Federal Reserve right now, the wealth effect. The wealth effect is the idea that when the price of assets rises, those that own those assets feel more wealthy, spend more money, help the economy expand, create more jobs, the transmission mechanism. And so that can provide cover, this driving wealth effect, for a lot of bad public policy on the monetary side or the fiscal side. And so he should forget the wealth effect. The Federal Reserve has done more to increase the income gap, the wage gap, the wealth gap in this country than any other body over the past 15, 20 years. So I'm good with current Fed policy. Rates on hold. We're at 4.25%. Good level, not far off the long-term historic average for the federal funds rate. We've seen the Federal Reserve work hard to reduce its balance sheet. In March, end of March 2025, the balance sheet was at $6.740 trillion, down from $8.5 trillion in 2020. So the Fed's trying to reverse that balance sheet, reverse that quantitative easing. Most of their balance sheet assets are held in U.S. Treasury securities, a little bit in federal agency debt securities, and too much, I would say, too much agency mortgage-backed securities. So think MBS, mortgage-backed securities, to prop up the housing market, to keep interest rates low. I think Trump and the Trump administration are making a mistake here. I hope Powell does not resign. I hope they do not open an investigation into Chairman Powell on the idea that he may have misspoke about the items in the budget for the renovation of the Fed headquarters. Obviously, Fed Chair Powell is not a loser. You can disagree with his decisions on monetary policy. He's had an amazing career. He's created quite a life for himself and his family. And so this is just not helpful by Trump. And then before we go real quickly, keep your eye on China. Something's going on with Xi Jinping. his wife, his faction of the CCP, connected directly to the military. He hasn't been seen in public. He missed the BRICS summit in Brazil. He has met with his wife at public events. There's speculation he and his wife are trying to plan an escape from China, thinking about possibly Kazakhstan as the place of exile for them. And so there's some internal CCP stuff going on that's not being picked up by the Chinese press, or too much press actually in Asia. Speculation in some US press. But internal politics are coming to a critical point in China. It looks like Xi Jinping's term as the head of China is going to be over soon. It's not quite clear the faction that's going to be brought in will be more of what Xi has been doing for the past 10 years, or go back to the economy in direction that Hu JinTao had in place before Xi Jinping took over. So keep an eye on China headlines, political headlines. When we think of the trade negotiations going on with China, the geopolitical concerns with China, Taiwan, of course, BRICS, the Belt and Road Initiative. A lot of this is tied to Xi's time, and what will it mean if he's taken out? Will they allow him to escape the country, or will be held in China? Something's going on there. All right, that's all I have for you right now. Always try to buy American.